Dipan Mehta is also here with us. Dipan, have you been buying in the last 1 week or so? Have you added on to some positions or looked carefully, or not much activity really?
Yeah, good afternoon. Thank you for
Good
having me on your
afternoon.
show. No, I think that our view remains very cautious at this point of time, and we are in a wait and watch kind of a scenario. And I do feel that stock prices need to correct significantly before we can start to look at buying. Overall, I think the structure of the market has certainly weakened, and there is a lot of concern around high valuations and what is happening globally as well in terms of inflation, interest rates. So from that point of view, I just want to be a bit cautious. And right now, we have not at all in the market to do any fresh purchases.
IT is another sector where you've been adding exposure as well. Thank you so much, Pankaj, for joining in with us this afternoon on ET Now. It's always a pleasure having you on the show. But I want to continue the discussion then of IT only and take it forward. Deepan, what's your thought on the IT sector as well? We've not seen much of a recovery yet coming in there. What is it that one should watch out for now? In the near term, anything looks exciting, or maybe just wait out for FY25 now?
I think that IT eventually will start to do much better than the rest of the market. To an extent, I think it's under-owned, and maybe they have got a problem for next 2, 3 quarters, maximum a year before IT spending comes back strongly. And this new artificial intelligence is turning out to be another big wave for tech companies. So from that point of view, I think intuitively IT should do well in the rest of this year and next year as well. But I'm just waiting for the right triggers. And the right triggers will come when the companies announce their quarterly results, maybe for March quarter or June quarter, I can't say. And managements are far more optimistic. And we actually see a progress in terms of billing from a lot of the large contracts that IT companies have won over the last 2 years or so. One big difference about the slowdown in IT tech spending and IT industry per se is this time around the order book position is very strong. New engagements are growing, just that it's not translated to billing. And once that starts, I think you will see the growth rate surprising you. But right now, I think given the risk return profile, the fact that billings haven't started for a large number of new contracts, I just want to wait and watch and hold on to our positive view. And at the appropriate time, I think when we are sure that the volumes are now going to start picking up, that may be a good entry point.
Modi talking about the energy he's actually spotting and many of the startup universe. Dipan, do you have any part of your portfolio in the startup universe or the unlisted side of the market? Because that is also buzzing a whole lot. I was speaking recently to a private equity guy, and he was saying that when the economy does well, then huge dollops of liquidity also get sucked into the unlisted part. It could be startup, it could be unlisted bigger companies. HNIs are moving towards that side. Are you also having some part of your portfolio there? And if yes, what sectors?
I do not have the kind of understanding about the startup sector and what really ticks over there and which companies to buy. There is so much of choice in the secondary market itself in the listed space. So many new listings are taking place in the last 2 years or so. So many concept stocks also have got listed. And intuitively, I feel that in the startup space, the valuations are even higher than in the listed space. That's because expectations are running high, and there's a lot of money chasing, I would say, businesses within the unlisted space. So from that point of view, I think the best returns will still come from the listed space. You could get lucky and have 100 bagger in a startup space, but to do that, you need to invest in maybe a few hundred such startups to get the right one. And that's not something which is everybody's cup of tea.
One of these venture capital kind of platforms which there are these days. So there's a case of basket buying. But I will get back to the private market. I want to talk to you about engineering design companies like LTTS, say Tata Technologies got listed recently. They are not run-of-the-mill IT companies, but very, very specific niche, and their clients are doing well, right? Are you finding comfort in these stocks, or you'll stick to the traditional IT company business models?
You could add Tata Elxsi also to that list. And no doubt, I think I feel that given the present situation, these companies are in the right place at the right time. Because especially when it comes to Tata Technologies and Tata Elxsi, They are very much focused on the automobile sector, where there's a huge, I would say, disruption taking place, a revolution is taking place. Electrification is the way forward, and that has been well established. And companies like Tata Technologies and Tata Elxsi are helping companies, go on the path of electrification. There are many products. They have got certain patents also over there, and they have good domain knowledge, which is why I think that even when there's an overall slowdown in spending, these companies should do well because all the projects are multi-year projects and they are transformational projects for their customers. But some of this optimism and higher growth is priced into these stocks. The likes of Tata Tech, KPIT, and Tata Elxsi are trading at premium multiples in the as compared to other peer group companies, higher than the likes of TCS, Infosys, Wipro, HCL Tech as well. So although the growth rates are good, some of it has got priced in, and it's a sustainable business model. But to get a good return from these stocks, you need to buy them maybe 15, 20, 25% cheaper, which is possible if there is an overall correction in stock prices.
Dipan, let's just talk about some of these private banks. Everyone keeps talking about HDFC Bank now. But, what are your thoughts on something like ICICI Bank, Axis Bank? You don't see those coming so many in terms of the names that come out there. Everyone only talks about HDFC Bank. Thoughts on this private banking space?
So on the private banks and all of these companies which you named are, I would say, amongst the few pockets in the market which are trading below their historical valuation ratios, and that certainly gives an opportunity. It's just that to an extent they are overowned, and there is certain stress in the banking sector in terms of raising resources because of a tight money policy followed by the RBI. But I think that over a longer period of time, 2, 3 years, these companies will be outperformers. I cannot understand that if you are positive on India story, how can you be negative on HDFC, Kotak Bank, ICICI Bank? Typically, banking sector does at least 30-40% higher growth rates than the average GDP growth rates. And these are companies, which have got the brand in place, their risk management systems, technological platforms, the human resources. A lot of the challenges they have faced, and they have kind of, conquered those challenges as well. They are well managed companies. They have gone through a lot of turmoil in the past, but now have emerged stronger. So I would say that I'm very positive on the private sector banks. And even in a falling market, I expect these banks to outperform by falling a little less than the rest of the market.
Dipan, we have seen how this entire hospitality space got re-rated in the last couple of years. Many of even the large caps have become multi-baggers, right? Like Taj Group Hotels, ITC, of course, is one small part. But and now we are looking at Sammy's of the world, Surendra Park Hotel IPOs coming, talking about aggressive room addition. What I want to understand is that one part of playing the travel bug, phenomena is via these hotel stocks. But why is VIP halved in trade in the last 6 to 8 months? I mean, that's the only listed company which is a pure play, travel and baggage company. Look at VIP in the last 1 year or so, 700 odd to 460. Is it a good business to get into, or have you looked at it?
I like the story of VIP Industries, and it's a perfect play on premiumization. It's a great play on increasing the organized market, increasing their share from the unorganized market. And look at the way air travel and air passenger traffic is growing, and that certainly generates demand for soft luggage and quality luggage players like VIP. So it's a great story, and they have had their challenges in terms of earning volatility because of demand mismatch and raw material prices. But by and large, it's a well-managed company, a solid brand, and I've not really checked at what valuation it's trading at. But I think if it's a reasonable price earnings growth, I think it's a good story to invest in. And the most important company to buy in the travel space you've forgotten is Interglobe Aviation. And again, disclosure, we and our clients are invested in it. It's India's largest airline company with almost 60% market share. Okay, next couple of quarters will be soft because of grounding of planes, but we have massive capacity addition happening in FY25 and beyond. And it's a nice business now. There's a great deal of price discipline, and I think this company, in terms of valuation, is at a very attractive trading price.